I have updated the key support level and the potential upside price targets on the S&P 500, the XJO, the FTSE, and the Shanghai Composite Index. And I wanted to show you a couple of charts. So starting with the S&P 500, we've seen the index extending its upward trajectory over the past month, slightly exceeding its previous high and posting a fresh record all-time high of 4,257 on Tuesday, the 15th of June, just to see it solidly trading in the rate the day after, when the Federal Reserve announced that it's most probably likely to hike interest rates earlier than anticipating and penciling in 2 increases by the end of 2023, which comes very timely with the formation of a bearish divergence between the price and the RSI indicator on the daily chart, and also coinciding with strongly overbought momentum conditions on the monthly and the weekly charts. However, despite the overbought momentum levels, which are usually the first red flash, giving warning that the uptrend is getting quite extended, the daily RSI still fluctuates within the boundaries of its bull market range, and at this point we don't see a reversal of the primary bull trend. I've looked at indicator which has worked really very reliably over the past 30 years on the S&P 500, which is the Fibonacci indicator. I've done some projections, and it's interesting to see that we don't see solid resistance arising until 4,500 points, which coincides with the 423.60% Fibonacci extension, which is measured from the December 2007 high to the March 2009 low, which means this is a strong level, and I think the market will revisit that level in the next 6 to 12 months. So overall, despite the market being overbought and clearly slowing down, and I believe we will see the pace really moderating in the next 6 to 12 months. However, at this point, there is no reversal of the uptrend, and I don't see a major top forming before 4,500. Moving to our market, the XJO. Similar, we had a strong month, and we finally saw the previous February 2020 high of 7,197 exceeded, with the index also posting a record high on the 15th of June of 7,466 points. So we are in uncharted territory, and I'm looking at the momentum indicators. So the picture is very similar to the major US indices. Daily momentum indicators remain firmly in the bull market range, therefore projecting further gains in the next 6 to 12 months. However, monthly and weekly indicators are already reaching overbought levels, which shows that the pace of the uptrend is likely to moderate from here. So in the short term, I wouldn't be surprised if we see a little bit of a pullback to 7,150, just to retest the previous breakout point and to unwind the overbought momentum levels in the short term. However, over the medium to long term, I believe 7,560 points is easily achievable, and most probably the index will overshoot that level. Moving to the FTSE, this is one of the few of the major indices that haven't reclaimed its February 2020 high. However, I'm not really that concerned looking at that chart, and I think the index is on track to revisit those high in the next few months. In particular, I'm looking at the medium-term uptrend line, which is still exerting support. suggesting that the uptrend is likely to continue. Price action is quite constructive, is trading within the boundaries of an uptrend channel. So first, an easy upside target is 7,500 points. However, I believe this level could be exceeded in the next 6 to 12 months. And finally, for today, the Shanghai Composite Index, although it trades in the same direction over the past 12 months with the rest of the global indices, it's generally completely disconnected over the long term in terms of swings and highs, support and resistance levels. Nonetheless, I'm still positive on the Shanghai, although we see a clear slowdown in the uptrend over the past 4 months. There is one bullish development that I've noted on the 10-year chart, which is that the last rally in March exceeded the previous key resistance for the first time. The resistance is at 3,684 points, and that was exceeded with about 50 points for the first time ever. It shows that buying Chinese equities is definitely building up, and I believe subsequently this level of resistance, it is going to be broken, which most probably will send the Shanghai up to 4,000 points in the next 12 to 18 months. In the medium term, though, given the strong run, most probably the index will trade sideways and roughly fluctuate between 3,300 and 3,800 for the next 6 months before it gathers momentum to break that key resistance. So to wrap it up, yep, markets are extended, they're overbought. However, I don't see reversal levels, and I believe over the next 6 to 12 months, we will see further advances with 4,500 being our price target for the S&P 500 and 7,560 our target for the XJO. Thank you.